Would you like lifetime wealth? Well, today I'm going to explain what that means and how you could achieve it as I replay a chat I had with my good friends Louise Bedford and Tate. They're from the trading game, and we discuss the concept of what true wealth is. Now, this is the last of the summer series of podcasts. Remember, in January I've been running 3 shows a week rather than 2. But since this was the second most listened to podcast I've ever recorded, I thought it was really important to let you listen to it again, if you're a subscriber for some years, or for the first time if you're a relatively new subscriber. Now, the original recording of the show came about when Louise, Chris and I were sitting around the table. We were chatting about Wealth Retreat. We were planning Wealth Retreat, and this was 3 or 4 years ago. And we were discussing the concept of creating lifetime wealth, what true wealth is, and some of the concepts we wanted to share with attendees at Wealth Retreat. Now, the conversation was so good. It was a bit philosophical, but we actually pulled out a phone. I think it was Louisa's phone now, and we just recorded an episode of the podcast for her podcast and for mine, because we were talking about things that we only tend to talk about amongst ourselves, but I wanted to share it with other people, with you. For example, I talked a bit about my first investment property that I made, almost 50 years ago. We talked about how being truly wealthy is a lot more than how much money you've got or how many properties you have. We talked about the concept of creating lifetime wealth, about leaving a legacy, and we discussed how we are the mentors of our children, and how if you want to leave a legacy, it's important what you pass on to your children. I'm not talking about money. It's not what you leave your children. It's what you leave in your children that's important. Now, Louise talked a bit about the imposter syndrome, something that she's knows a lot about, and we discussed things about success, the mismatch between some couples, how sometimes you come across people, in fact more than sometimes, reasonably frequently, who are very different to their life partners with regard to how they think about money or success. There are so many fascinating concepts we talked about that I really believe you're going to benefit from today's show, but be warned. Firstly, it's a little bit longer than normal, but we kept going because I think the conversation was so good, and the sound quality isn't as good as we'd record today because we recorded it on the fly. Remember, we were just in the right zone and we were talking about the right content, so I thought it was really important to grab the information a couple of years ago, and believe me, it's just as relevant today. Now, when we talk about Wealth Retreat, you'll learn a bit about it, and we're planning to run Wealth Retreat 2021 on the Gold Coast on the second weekend of June. You can find out about it at wealthretreat.com.au. But even if you're not planning to come, and by the way, you should, but even if you're not, you're going to get so much out of today's show. So, welcome.
Welcome to the Michael Yardney podcast, where twice each week you will learn a number of new ideas regarding success, property investment, and money in around 30 minutes. Our show is brought to you by Metropole, who specialise in helping you grow, protect and pass on your wealth through strategic property and wealth advice. Now here's your host, Michael Yardney, Australia's authority in wealth creation through property, who has been voted one of Australia's top 50 most influential thought leaders.
I've heard it said that wealth isn't about how much money you have, it's about what you'd be left with if you lost all of your money and how quickly you could build it up again. I guarantee that unless you focus on your own education and you develop systems to continually bring wealth into your bank account, you'll always be hobbled by life. After a very in-depth conversation with my friends Chris Tate and Michael Yardney about this topic, we thought we'd let you eavesdrop on our chat about this essential area. That's why we've decided to hit the record button and produce this resource for you, so that you can shift your wealth thermostat in the right direction and develop true wealth, not only for you, but also wealth that can be your legacy. You see, because I'm a best-selling author of books on the share market, and I have been since the late 90s, I'm often sent emails by parents or interested adults asking how they can pass on the legacy of effective wealth habits to benefit the next generation. I'm Louise Bedford, and I feel this is of such valuable information for you right now. If we look at the big picture here, our overall goal should be to create lifetime wealth for ourselves and the ones we love and choose to help. Wealth that is unshakable. Wealth that no one can take away from us. That is true confidence. And we can set you on the path towards this goal today. When you're running towards a goal, feet pounding, arms flailing, your own head trash hardly ever gets in the way. You know what I mean by head trash, don't you? It's that little voice that says, I'm not good enough. But a lot of people say to themselves, if only I wasn't paralysed by fear, wondering how to generate true wealth. If only I knew how to earn money through more than just one source. If only I could focus enough to really excel. If only I could get unstuck. I do know what it's like, but hear this. Wishing things will change in your life and not doing anything about it, it's a loser's game. I want you to stop waiting for things to get easier. During the first 3 years when I was trying to break even in the share market, I kept waiting for it all to get easier. Then when I was working full-time, looking for a way to quit my job, which I did 5 years after I started, I kept waiting for things to get easier. So I don't want you falling into this same trap. This webcast is for you if you're wanting to banish that head trash forever and to develop specific strategies so that you can create lifetime wealth and legacy that will continue long after you're no longer on this earth. It could just be the most valuable segment of your life, but only if you pay attention to every word we have to say. And if you'd like more information at the end of this webcast, we'll tell you exactly how to get it. Let's kick off. Michael, tell us a little bit about your background, and then I'd like for perhaps you to give us your definition of lifetime wealth.
Well, thanks, Louise. A bit about my background. I'm a property investor, but I bought my first investment property, well over 40 years ago now. And along the way, I've made lots of mistakes, but I've also learned the right way of doing things from my mentors, from my peers, from the successful investors I've worked with, and some of the mistakes I've seen others make. And so it's actually allowed me to build a very substantial cash machine, a property portfolio that gives me and my family the choices I want. It's allowed me to give back to the community. So I now spend a lot of my time writing, mentoring, training other people. I see it as part of my commitment to give back to the world. It's helped me a lot. I'm really keen to have a bit of a talk about the things that you're talking about lifetime wealth, because I wish they're the sort of lessons, Louise, I would have learned a long, long time ago. I learned by my mistakes, Louise, and I don't know if you were taught the same. You got to learn from your errors. Did you hear that from your parents?
I did, but I seem to only ever learn from other people's errors more clearly when it came to the big lifetime goals. I think the smaller things I could teach myself, but the big things, that's where you can really put a foot wrong.
Well, I actually tried to teach myself, and I think it was a very, very expensive mistake. I think partly because I was a bit cheap and wanted to do it all myself, and partly because maybe I thought that was the right way to do things. You're either going to have to pay the world, the markets, the lessons, or you pay your mentors. But to answer your question about my thoughts on wealth, look, I agree with you. True wealth is more than just money. It's more than how many properties you've got or the size of your share portfolio. To me, to be truly wealthy, you need money in those areas where it's important, but we also know that there's lots of areas where it's not important. So for me, true wealth is money plus health. If you haven't got your health, all the rest isn't much benefit. It's money plus the family, the joy, the people that you share it with, your family and friends. Money plus the ability to keep growing. I want to keep learning things every day. Money plus spirituality, and I guess that means different things to different people. Money plus the ability to give a contribution, to leave a legacy for others. So true wealth to me is what you're left with when they take away all your money, they take away all your properties, they take away your shares. That's the real wealth, what's inside you.
That's great. Chris, I remember you saying to me the other day that for most people, once they're gone, their ripples have gone. Maybe you could tell us a bit about your background and what you meant by that comment.
Well, I come from probably a similar background to Michael, but all you have to do is insert the word shares in terms of the word property, and you get basically a similar story. What you find with everyone who has been successful is that the road to success is littered with failure, and it's littered with mistakes. And there is, the expression I use is, nobody is Robinson Crusoe. Everybody seems to repeat the same mistakes over and over again. In terms of the notion of ripples, The issue we have is that we are transient. Whilst you're in the middle of your life, you may think that it's going on forever, and you might think it will continue forever. The thing about that is it doesn't. It may also seem that if you've had children, that you've got something to leave behind. You've got some sort of legacy. The problem there is all you've actually done is fulfill your evolutionary destiny. Any animal with genitals can have children, and that's not necessarily creating a legacy of any sort. So to me, the question of sort of legacy is twofold. It's what software have you equipped your children with? What values have you given them? Are they expansive? Are they generous in their values? Do they look at the world in a certain way? Or have you merely programmed them with the same basic fears and inadequacies you have? And the thing about children is they absorb things without being directly taught. So if they see that you are fearful of life, if that you jump at shadows, if you have what we would call the incorrect money scripts, they will absorb that. The second part of legacy, or leaving a ripple, is something Michael touched on. And that is simply, is there something outside of you and your children that carries on after you've gone? What impact have you made upon others?
I do think wealth helps us become more self-actualised though, because you have your basic needs looked after. So that's when you can do some more deep thinking. And based on what we're told by futurists, most people will experience 3 to 7 complete career changes throughout their lifetime. So that involves complete retraining so that they can get back up to speed. I mean, I've been an example of that. I did have a career in the corporate arena, but I suffered a health issue, which meant I couldn't move my arms for 3 years. And of course, in the corporate arena, they don't want you if you can't move your arms. So I had to consider share trading as being my choice. I was already trading as I went along with my corporate side, but it certainly became much more important. During these times of retraining, usually people's income goes down to absolutely nothing. And that's why it's essential not only to specialise in your career skills, but also to develop expertise in non-related areas to tide you over in these lean times, like learning to trade or learning to invest in property. So, Michael, I'm curious to hear your views on this. You once told me that retirement is a middle-class concept and that most people never seek to alter their financial thermostat. Tell me more about this. I really want to hear your views about why people have trouble accumulating enough lifetime wealth to create a legacy.
Gee, there's a few good questions in there, Louise. So first of all, retirement is a middle-class concept. What we do at Metropole is we sit down with clients and we work out where they are, where they want to head, and then we help implement a property strategy to get them there. And when we ask people, well, what is it that you want? What's the end game? Louise, very few people actually say retirement. Why I said retirement's a middle-class concept is because it's the workers, it's really maybe more a blue-collar concept who actually work 5 days a week just to have a weekend, and they work 50, 40 years of their life to get into retirement. For most people that I see, for wealthy people, truly wealthy people, they see it as their obligation to earn more, to make more money, to give a contribution, to have a legacy. So if your purpose for getting money is for security or to prove yourself or for anger, because you're angry and cross of your childhood, you're never going to become wealthy. And so this leads into maybe the second thing that you asked me a little bit about the financial thermostat. Louise, I don't know if you've heard it said, I've often thought that if you took all the money in the world and divided equally, it'd certainly be back in the same pockets again, wouldn't it?
That's right.
However, most people don't get to the next level because they complain about the tax system or the world or how the share market's going or the property cycle. So I learned a long time ago from my mentors that to have more, you can have more because you can become more. The other side of the coin, of course, is unless you change how you are, how you think, what you do, you'll always have what you've got. So all this share stuff, the property stuff, it's good, but it won't do it enough for you to become more, to have more, whether it's wealth, security, more comfort in your life. You actually have to change. And I think one of the things you have to change is not your knowledge, because there's people who are smarter in the share market than some of us, and there's people who know more about property and research than I do, but they don't get to the point of having the true wealth that we talked about a while ago because of the way their financial thermostat is. What I mean by that, Louise, is we weren't born knowing how to do money, and so we learned a level of comfort about money, about wealth, about riches from our parents, from our culture, from our experiences when we were young, things we heard, things we saw, things we experienced. But interestingly, I think most people accept the rich keep getting richer, and that's because their thermostat is set for higher. If you think about it, what's Donald Trump's thermostat set for? It's set for billions. If he was a millionaire, he'd feel poor. But a question I'll often ask people at seminars is, what's the average Australian's thermostat set for? And then I actually push their buttons a bit because I say, guys, what do you think your thermostat's set for? Would you like to know? And they all say yes. And I say, your thermostat's set for what you've already got. And then they say, that's not fair, Michael. I actually would be, if I had a good job, I'd actually do better. I could buy my properties or I could invest in shares. But I've got a lousy job, so I can't. I haven't got the finance for it. If that's your philosophy, if you're destined to stay where you are, some people say, look, if I had lots of money, I could actually be generous. I could give to charity. But I don't have much, so I can't be generous. So what I'm suggesting is you actually have to change. It won't change until you change. However, when you throw away the blame, when you stop blaming others, when you become more yourself, when you upgrade your thermostat, and I know that's a lot about what your mentoring program's about, Louise and Chris. I know it's what my mentorship program's about, and it's in particular what our upcoming wealth retreat's about. The difference is when you change, when you upgrade your thermostat, everything else starts to change around you. But I've found, Louise, that there's obstacles for people. The people seem to have obstacles in their track to get there.
I think you're so right. Those obstacles can just seem so big. One of the ones I think some of our traders face, and I'm sure your property investors face as well, is the imposter syndrome. Now, if you haven't heard about that, for everybody listening, basically what it is when you've achieved success, all of a sudden you feel that success is undeserved. Now, I've been in touch with Pauline Rose Clance. She was the one who originally coined that phrase with Suzanne Imes back in the 70s, but it has gathered a lot of momentum now. Those afflicted think that whatever they've done, whatever success they've achieved, it's not because of their own abilities, and it can be debilitating. It's men and women too. They think that they're going to be exposed for being a fraud, and they think that their success is due to good luck. And that can be absolutely stymieing on future growth. When I see people in our mentor program afflicted with this, it's almost like they work so hard, but then all of a sudden they quit. They self-sabotage because they go, well, I'll never be able to do it. It's something that I'm not worthy of. Other people are more intelligent than I am. I can't possibly extend myself in that way. So I think some of these things are about self-awareness. And in some ways, I think a lot of traders and a lot of investors white ant their own future. It's in their head, and they've actually sabotaged themselves along the way.
Louise, do you think there's an element of guilt there as well?
Sometimes there is, but sometimes it's because they have those voices going through their mind that set that financial thermostat in the first place. That's
what I'm saying.
Yeah.
They think, I don't deserve it. And rich people are filthy rich, dirty money. You can't, all those expressions we heard. What's the story about the camel and the eye and the needle and all that sort of stuff?
That's right.
So I see exactly the same in the people I come across every day, Louise.
I think sometimes people don't understand the importance of working on themselves to be able to overcome some of these issues. And that's one thing that I know we all share as a value between the three of us. I'd be interested in hearing your views on this too, Chris.
The issue is one of software. It's not the tool that makes the person successful. In our mentoring program, we frequently hear people say, well, I must trade foreign exchange to be successful. I have to trade options to be successful. And I've certain that Michael's heard people say, well, to be successful in property, I must do developments. I can't do renovations. I can't just buy a house. And they believe that the tool has something to do with their success. when what actually is powering their success is actually their software. If you strip back successful people, if you cut them back to their very core, you'll find that they're almost all identical. They have the same software running inside them. And sort of the archetypal example of this is Richard Branson, who's a serial entrepreneur. If it was simply the tool, then he would have only ever been successful with his student magazine. He wouldn't have bought a record store, then a nightclub, then an airline, then a mobile phone company, and now space tourism. The vehicle is always changing, but the individual who drives the vehicle stays the same.
He is such a dude, isn't he? I got my little boy the Guinness World Book of Records, and Richard Branson's on there for holding the Guinness World Book of Records record for the most people surfing a kite. Is it kite surfing? Yeah. So he's got these nearly naked women all over him, which is hilarious. And I guess as well what we're talking about is it comes down to having a business-like attitude in relation to your investing so that you end up surrounding yourself with people who are more successful than you are. And some masterminds do get together, but if you are the king of that mastermind and you're earning the most, hey, you're on an ego trip and a half. It's not where you need to be. You need to be pushing yourself and challenged. I love it that for the past 4 years, we've all been hanging out, the three of us, in this like nearly secret society. And frankly, Michael, I know you've been quite vocal about it, but Chris and I have barely ever mentioned this to any of our traders. So it might come as a bit of a surprise to them. But your wealth retreat that we are now going to be partners with you, it's just magic. It is fantastic. It's a successful group of entrepreneurs and traders and property investors, and we meet once a year. And the changes of this immersion, it's incredible. It's a 5-day retreat where you can focus on building that lifetime wealth and that ongoing legacy. But I'll tell you more about that later because we want to really get into the guts of what it takes to create that lifetime wealth right now. Chris, I want to hear your views on the importance of relationships with your significant other, whether it's a lover or a spouse or your husband or wife, as the case may be. So often this is such a major part of our happiness. Chris, a few weeks ago on our Talking Trading Free Weekly podcast, you got into trouble for some of your views on this topic. Tell us a bit more about that.
Well, I only got into trouble for saying that people with diametrically mismatched views that we were holding one another back should actually get a divorce.
Yeah, I can see why that would get you in trouble.
Well, it's a difficult topic because there is often within couples, and think of them as a unit, there is a tremendous mismatch about money and all the things that go along with it. And this disconnect, this sort of juxtaposition between two opposing sets of views can be as simple as one thinks about money and the other doesn't, or it could be that they're diametrically opposed in that one thinks money is expansive and gives you the capacity to do things, where the other one has been brought up thinking that money is evil and that only people who have done something illegal or wrong are wealthy. And this sort of conflict produces tremendous tension, and it can actually tear relationships apart. My observation has been that there is very little thought that goes into couples talking about money, and more in particularly about their beliefs around money. Whilst everyone's getting hot and heavy in the back of the Valiant at Frankston Drive-In, and we then all race off and get married, that seems like a brilliant idea. But very rarely do people sit down and talk about what their views regarding money are. And sometimes in couples counselling, you'll hear people say, well, we plan to buy our first home together. Well, that's all well and good. That just makes you ordinary and the same as everybody else. What happens once you've done that? What are your views post that event? And the problem is that partners need to be compatible on a whole raft of issues, be it emotional, psychological, physically, but also financially. Without that compatibility, couples either go nowhere and they end up miserable together, or they fly apart.
Chris, I've found something very similar. I agree with you that most couples are at different levels in the way they look at money and finances. And I've read that it's one of the biggest causes of divorce or marital strife. I'm not sure that couples will ever be equal in the way they think and drive about money, but it is critical to have those conversations and to understand how your partner thinks. Only yesterday I spoke to a lady who's a GP, a doctor who's built a very, very substantial property portfolio. She had $7.5 million worth of real estate and, interestingly, only about $3.5 million worth of debt. So they had $4-ish million net worth. But interestingly, she didn't feel wealthy. She drove a small car. Her husband doesn't like cars, was his answer, and so he actually drove a beat-up old car. They were still working hard. This goes to the fact that they've been fortunate because they're both doctors in their profession to be able to build up some assets, but they're not able to enjoy it or to pass it on to their kids. And some of the messages they're talking to their kids about that they're giving verbally and non-verbally are probably negative messages as well about their wealth. So I actually think it is important for couples to talk about it and at least come to an understanding of why you've got the attitudes you've got about money. And that's one of the reasons I love it when at Wealth Retreat people bring their significant others, their spouses. Many bring their business partners, and that's important to be on the same wavelength. But also for couples I fully agree, it's important to help your couples, your life partner, and also that will send a much, much better message to your kids, won't it?
Yeah, cohesive. Absolutely. I do think, though, if you're the one with the vision for your family, you have to be really careful that you don't lower that vision to the lowest common denominator, because it's very easy to fatigue when you're the one striving if you're not getting that family support. That's really why I like training couples together, if possible, because then you're not having that burden placed on the one who is the striver, so to speak.
It's also important, Louise, to have, as you mentioned before, your mastermind group so that you can actually hang around with other people who think similarly to you to show you that the way you're thinking isn't wrong. People who are actually going to push you further rather than pull you down.
And to give you strategies, like one of the things that I have trouble with in past tense is that if I was interrupted mid-trade, I turned into some sort of feral crazy beast, and I'm just like, rah. Usually I'm quite a peaceful person to live with, but on those particular occasions I just was not, because it was standing between me and the money. So to be able to have just a specific discussion with my husband about that one issue has soothed a lot of marital complications, shall we say. I want to talk about children because that's something that is really important to me, passing on wealth knowledge to the next generation. Often people can't pass down their job skills or their business to their children, but luckily we can pass down a property portfolio or a share market portfolio. And it's another way that wealth can be kept within families. One of my darling friends, his father is currently, unfortunately, his days are numbered. He's in the process of dying. And to see what this great man has done in terms of wealth, I remember in my 20s, he said to me, Louise, the only way that you'll be able to create a legacy is to make sure you have the skills and to keep wealth within your family and to pass on your views. And along with you, Michael, he has been a massive influencer of mine, and his ripples will just continue to go on after he has gone. Michael, I'd love to hear your views on this.
Well, Louise, in the old days, I guess people used to pass their trades on. You were a blacksmith, so your son became a blacksmith, you apprenticed them, and that's how you passed it on. Today, as you correctly say, that's not the case. In fact, as you said, a lot of people change their careers along the way anyway. So what can you pass on to your kids? And one element of it is your property portfolio or your share portfolio. But I think it's a lot more than that. It's not what you leave your kids, it's what you leave in your kids that, in my mind, is important, by teaching by example.
Oh, I like that, Michael. It's not what you leave your kids, it's what you leave in your kids.
Very much so. Don't you think the conversation around Richard Branson's kitchen table would be much different to what you experienced with your family, Chris, and my family when they were sort of struggling month to make ends meet? And so they're the sort of things that have, I guess, still affect a lot of Australians. We learn most of what we learn about money from our parents. It's things we heard. Interesting, it's also things we didn't hear, but things that were not spoken about. So what did your parents talk about money, or your peer group, or your culture, or your religion? What did you see at home? I saw arguments and fights every month when the budget didn't meet. What did you experience? Money actually didn't have good experiences for me, and that's why I probably spent the first half of my life chasing money for all the wrong reasons. And if you chase money to make you feel more secure or comfortable, or to get rid of the anger, or to prove a point, money will never make you more secure. Money will never make you feel better if that's why you're chasing it, or it'll never prove that you're any better than other people. So you have to have a good and significant reason for getting your wealth. I think a lot of people don't realise that as they get older, they become more and more like their parents. Have you noticed that, Louise?
Oh my gosh, yes.
Not school, if you think about it, you ask, but have you noticed how your partner becomes more like their parents?
And at a school reunion, sometimes it's very hard to differentiate between who you went to school with and your memory of their parent.
That's really interesting, isn't it? So therefore, one of the reasons I've always had the intention of keeping changing, keeping growing, keeping upgrading my financial thermostat is I got rid of all those bad. Well, maybe I should put it slightly differently. I used to drive around with one foot on the accelerator and one on the brake. So I was actually going forward doing stuff, but I was doing a whole lot of things that were sabotaging myself as well. And I did a really, really good job at that about 20 years ago. So the concept really is to get rid of those non-productive, those beliefs that actually hold you back, that stop you moving forward, and replacing them with empowering beliefs. And that's done. You can't do it on your own. You actually can't just sit there on the couch and do affirmations and think good things and it will happen. That's what they say in The Secret. It doesn't really work like that. So what you need to do is have the right environment with the right exercises. And that's one of the reasons at the beginning of Wealth Retreat, we spend a little bit of time wringing out your mind of all those unproductive, non-resourceful thoughts and replace them with a whole lot of new beliefs. Can I just spend 1 minute on that, please, Louise?
Yeah, I'd love to hear your views on this.
Because I remember at the beginning of the first Wealth Retreat 10 years ago, there was a lot of very successful business people, entrepreneurs, traders and property investors. And I said to them, if you had all the money in the world, what would you do? And they wrote a list. And then I said, okay, please rank that. Would you please rank of that list of things that you now have to do a 10? What's really important to you? A 10 out of 10 you've got to do. What's a 9? What is the sort of stuff that's pretty critical? What's an 8? What's a 7? And most of the people who came didn't have many more 10s, 9s and 8s in their life. They'd achieved a lot of what they wanted. And so they were sort of wandering around. I found a lot of them were isolated also. They felt they didn't have a lot of people to speak with about their successes or their challenges.
So they hadn't reset their goals?
Well, they hadn't, but they were coasting, and that was the trouble. So what we did was go through some specific exercises, and it did not just have to do with money or shares or property, but it actually had to do in all areas of their life. And then when we gave them these, they had a whole lot of 10s and 9s that they had to achieve. And you know what, Louise, and I know you've experienced it, and Chris, you've experienced it as well, a lot of them were around legacy. A lot of them were around contribution. Some very, very big ones, benefactory ones, and other ones just with regard to the family and their kids and grandkids. But it then gave them a whole new purpose, a new meaning for growing their share portfolio, for growing their property portfolio, for trading better, for investing better. In fact, it became their obligation to do it. So the concept really is most of us are coasting because it's easy, and we walk around with our head in the sand to some of the things that are holding us back. So the concept is become a better share trader, investor, entrepreneur, business people by surrounding yourself with good people, by having somebody look at your blind spots, by having some transformational conversations, by setting yourself new goals, and then regularly reviewing it. And that's why a lot of people come back to Wealth Retreat. And one of the interesting things, you will remember last year, one of the gentlemen who brought his son. He's been 3 times. The first year he learned a lot. The second year he brought his wife. This time last year, he actually rang me up and he said, Louise and I are in Melbourne. Can we catch up for dinner with you and Pam? And I know he's from Queensland. So we went out for dinner. I said, what are you doing down in Melbourne, mate? And he said, remember last year at Wealth Retreat, I said, next year for my 50th birthday, I'm going to get a Maserati. I'm down here to pick up my Maserati. And he was, and he drove it there. And remember, it was in the car park underneath there at the hotel. But first year he brought his wife. Next year he brought his son. How do you get your kids involved? How do you get them involved in the property market and the share market? Louise, what are your thoughts on that? How do you, one, at least, even they're old enough and they're adults, you can bring them to Wealth Retreat. But I think it's got to start much earlier than that.
I do too. I think there's some critical ages that we're looking at here. Certainly, if you've got children or grandchildren, that is something that I think a lot of people don't even consider. I have 2 children who, of course, both of you have met. Ryan's 12 years old and Ashley, my little girl, is 7. So I've also been focused on helping my niece, who is now an adult, to trade effectively as well. So I think if you've got really little ones, you can encourage them to draw in trend lines and have them spell the words up and down and trend. But really with the little ones, you just have to get them so that they're interested, and that's quite easy. You just ask their opinion. So I've been doing this with my own children, and they can both draw candlestick charts, and they understand the basis of if you don't have something, how you want something, and that's the supply-demand curve. And the other thing that I've found, I wrote my book Trading Secrets while my little boy was crawling around my feet. So if you need some quiet time with trading, you need to find some way that they can give you some time. So that's either involving childcare or involving them to some extent to set up a little office beside you and do what you're doing. And then when you're with them, you can be completely with them and immerse yourself in their gorgeous little childlike wonder of the world rather than be thinking about what's that trade doing. Now, if you've got children that are slightly older, certainly there's some things that you can do here. One of the methods that you could consider, depending on your views with this, I don't recommend it for every teenager, but you could loan your teenager a certain amount of money to utilise when trading. So if I've done this myself with another child, if they follow their trading plan to the letter, they get to keep 50% of their profit. But if they don't follow their trading rules, they don't get any money at all. That is how to breed a system trader. You give them a bribe. It's a wonderful thing. So it does pay to be aware of your teenagers' limitations. Teenagers think differently from us. I think from all of the research that's been gathered, adults tend to make decisions more quickly and with less effort, and they also judge the level of risk more appropriately because they have that more mature brain function as well as more life experience. So definitely take this into account when you're trying to pique your teenagers' interest with the share market. One of the things that you could get the school to do is to get the school to be involved with the Australian Stock Exchange School Share Market Competition. You can see asx.com.au for further details on that. Now, one of the things that I definitely feel is important is that we out-earn the usual public. Now, I know this is controversial, and I know some people will have just gone, that sounds hideous to say it in those terms, but I can tell you, rich people are thinking like that all the time. One of the reasons is there's a study that was by 17,200 babies born in April 1970, and it looked at them over time. Now, it ends up with the parents who earned more money actually have children with higher IQs. Now, I know it sounds repulsive, I get it, but crikey bejeebies, there is something to this. It's
Louise, if I could quickly interrupt,
Yeah.
it shouldn't sound repulsive.
It shouldn't,
does,
but
that's
people
the
do
negative
think
talk
that way.
we learned about as a parent, that rich people, filthy rich. To rich people, it doesn't sound repulsive at all.
No. And actually, we like the competition with each other. There are some things that richer people think that other people who do not have the money just do not think. It's creating a ripple effect that spreads beyond your own generation. And if it can directly affect the IQ of your own children, holy cow, that is why you should do this. You should actually aim to out-earn the majority of your counterparts. Chris, what are your views on this? There was a bit of a sigh from the corner over there.
Oh, not really. I'm a sort of a semi-student of looking at the notion of IQ and talent. In fact, talent in general. People often say that talent is overrated. It's not, according to the data. The best start you can give your children is, in terms of, let's talk about basic programming, the basic bits and pieces that make them up, is, whilst you can't make them smarter, you can't do that. But by the notion of socioeconomic status and the decisions you make, you can produce smarter children. The problem we find when we look at IQ, when we look at talent, is that gifted children born to poor parents, whilst they appear gifted in early tests, that quickly erodes. Any advantage they have is eroded. And this in some ways is related to the notion of what's called the Flynn effect, which has been the increase in IQs that we've seen in Western countries over the past 60 years. What we've also seen is that IQ and socioeconomic status are linked. If you have a very smart child, but you are of poor socioeconomic status, the likelihood is that your child's IQ and potential will degrade over time. And that's just one of those unfortunate things. I know it's, as you said, it's one of those things that sounds uncomfortable, but the problem with science is that it is unyielding and it does make people uncomfortable.
It does, and I do love it when I see that eye of the tiger just ignite in some of our traders, where they go, hey, this is a way that I can earn and I can outperform where I was before. And that, to me, that's the centre of ambition, but it's also being able to beat things like Alzheimer's in your own life. The people who have things to strive for, they're the ones who really are excelling, and they're less likely to have brain degradation as time goes on. Now, Michael, I'd like to hear more about Wealth Retreat. I know that our listeners can hear that we have a heck of a lot of information that we could keep on talking about here, but time is ticking on. Tell us a bit more about Wealth Retreat and what our listeners can do to get involved.
Well, Wealth Retreat came around, Louise, about 10 years ago when some clients of mine said, Michael, I've read the books, I've been to the seminars, I've got the DVDs. What next? I think felt a level of isolation. They also had their own fears still, and there was just so many mixed messages. So they wanted the sort of information that would take their entrepreneurials, their businesses, their trading, their property investment to the next level. So we put together an event which has, for now 10 years, been Australia's ultimate networking and educational event for already successful traders, investors, and business people to go to the next level. Every year it's been in the same room on the Gold Coast. It's the last weekend of May. So this year it's the 30th of May to the 3rd of June. It's 5 days of investing in yourself. I find, and I know you and Chris have found it very useful, just to step back and spend time looking at how your own businesses is going, how your own trading is going, how it's a time to invest in yourself away from the real world, and also to spend it with inspirational people. And a lot of what people learn from the time there is not necessarily from the faculty, and there's an expert faculty, but from the other room of doers and shakers, movers and shakers. I give an example. Imagine if you could spend 5 days with Warren Buffett and Donald Trump and Robert Kiyosaki, would you not come out thinking differently, feeling differently with new plans? Well, you and I haven't invited them to Wealth Retreat, but we've invited Australia's equivalents with yourself and Chris there with me, with top tax accountants, with economists, with property people, with finance people, with legal people. And the beauty of the small group environment, Louise, is that there's a lot of one-on-one time, the sort of thing that people can't get normally with me, with you. And I know even Chris Tate has agreed to give one-on-one time to people. And boy, that was a big concession for Chris to make, because that's not the way he works, but he will spend time with people who are there so that they can have their own individual problems, challenges worked out. So it's 5 very, very intensive days of working on yourself. And so it's not for beginners. So you have to have a share portfolio. You have to have done some trading, but it will get you to the next level. You've got to have a property portfolio. You've got to have a business.
You've got to have
started,
out. Really. You've got to have had some level of momentum.
Exactly right. But again, people shouldn't count themselves out, because every potential attendee will get spoken to by my assistant Joe Fitt, and then probably by me as well, to make sure that you're suitable, that you're going to help the Wealth Retreat community, and similarly that you're going to get good benefit from it. Every year, probably 25% of people are return attendees, and people say, why do you come back 2 or 3 years in a row? Are these Wealth Retreat people crazy? And the answer is, the world has changed, and you have changed, and some of the answers have changed as well. So there's a great mixture of very vibrant people who, in this environment, they feel safe. And so it's interesting how much they open up, isn't it? How they discuss and tell about their personal stuff over lunch, over dinner, over breakfast.
Yeah, it's great to see.
And I know you personally have got benefit from it. I have. And some interesting businesses have come out of it, joint ventures have come out of it. You never know what's going to come out of it this year. So you're right when you're saying before, in the past it has been much more property oriented, and now that we are doing this together, it's a much more holistic thing, and the focus really is on building your lifetime wealth in your chosen way of doing it. And I'm not sure that just property or just shares is the right answer, or just businesses. I think successful people do a mixture of those sort of things. But it's creating your lifetime wealth and leaving a legacy. I think that's one of the things behind it, isn't it, Louise?
I agree. I think that is a beautiful theme for Wealth Retreat. And Chris, I'd love to hear your views on this as well.
There's 2 things Michael mentioned that I want to touch on. The first is the notion of people coming back. And there's a saying I always return to when I'm going back to do something again for the 2nd, 3rd, 4th time. There's an old American Indian saying that says that no man can step into the same river twice, because you are never the same man and it's never the same river.
Oh, I like that.
It's actually very, very clever. And when you think about what it means, it simply means that the passage of time changes you. And as you change, you generate a different perspective, a different idea, a different prism through which you view events and people and knowledge. The second point that Michael mentioned was the notion of isolation. We nowadays are hyper-connected. We've got thousands of pretend Facebook friends. We've got thousands of people who follow our every move on Twitter. But the question is, of those people, of these digital friends, how many are actually friends? How many actually bring something to your life? And the thing I would say about social media is that you don't actually see your hyper-successful friends posting inspirational pieces on Facebook because they don't. That's not what they do. And so the notion of getting together in a room with others overcomes this notion of isolation, of feeling that you are Robinson Crusoe, that you are the only person undertaking this journey. And it's intriguing. When I listen to interviews with very successful traders in the US, very successful hedge fund managers, they're often asked about what their daily routine is. And the daily routine is, well, I caught up with so-and-so for breakfast and I spoke to so-and-so today about what they're doing, and I talked about these ideas and we talked about stupid things we had done. And they're talking about other hedge fund managers. They're talking about people who you would think they're in competition with, but they're not for some reason. They get together as
Peers,
mastermind groups. Medicos get together at conferences in exotic locations that they use as a tax dodge. Lawyers do the same thing. It is getting together with people who are the same. Because the unfortunate thing about being an entrepreneur is that 99% of the people you meet are not entrepreneurs. They're people who are stuck in a job. They're stuck in a rut. They're doing the same thing 9 to 5 every day. They wait for the weekend. I hate weekends because it means markets are shut, and the people I would normally do things with also hate weekends too, because they're an artificial impost. They're an artefact of the way we view time and the way we view the world. Once you find people that you can share things with, people who are like-minded, part of that isolation begins to evaporate. It begins to disappear.
So at this stage, for the people listening to this webcast, we just want to gauge whether you're interested in joining us. If you have an inkling that this event might have come around at the right time for you and you're in a position where you're looking to create lifetime wealth, you need to learn more. What you need to do is register your expression of interest at wealthretreat.com.au. So just that website again, wealthretreat.com.au. It is no accident that you've listened to this webcast. You can sense that you're in the right place and this feels like home. You can see a good idea and you jump on it. You know that you're destined for more in this life than you're currently achieving, and I'd be privileged to be right beside you so that I can join you every step of the way. If you want to take your wealth and investments to the next level, this is the event for you. Any last words, Michael and Chris?
Well, Louise, one of the things I think you should look at is how other people used the 5 days to change their lives. And I know there are a lot of people who came along to Wealth Retreat in previous years who actually made the decision to, I'm actually going to do the second half of my life different to the first. And many gave up their day jobs over a period of time. Some were in the position to do it straight away, but others actually set themselves some timelines and said, okay, at the end of this year, I'm going to give up my day job and I'm actually going to be trading full time. And there were others who've given it up to do their property full time. And others have actually just written a book because that's what they wanted to do. And interesting, in that room, there were 5 authors who were published authors who gave them the ability to do that. So if you want to do different things in the second half of your life to what you've done now, this is a great opportunity to get the ideas, the inspiration, and a toolbox full of tools to give you the ability to do it. So I agree, Louise. Just express your interest at wealthretreat.com.au. The website explains a little bit about what's going on, but interestingly, only before this session, you and I and Chris were spending time talking about the agenda. It actually hasn't been finalized. So while a lot of the agenda is formalized, a lot of it is still going to be very much tailored to what the attendees this year want, and that we allow them some input. That's also the part of the benefit of the one-on-one sessions. So thanks for giving me the opportunity to discuss it, Louise and Chris. I really appreciate it, and I actually learned a lot from you guys. I always do.
We love you, Michael. We adore our friendship together. Chris, anything else that we should be mentioning?
I've been warned explicitly not to say that one of the benefits is you can come and talk to me. However, one of the things that is important for people to realise is that, and this goes back to something that Michael said at the beginning, people are where they are because that's where they want to be. Humans exist almost to find the perfect state of homeostasis, this minimum energy state where you're comfortable. The expression I would use, which is somewhat unflattering, is that they're fat and happy logs. And the issue with something like Wealth Retreat is that you know intuitively and you know instantly whether it's actually right for you. People are quite capable of making that decision for themselves, because for those people who feel it is right for them, it's not really a decision. It's simply something they do. It's no more of a decision than you or I going to put the kettle on. For others for whom it is not right, it may never actually be right because they're comfortable. The question that I always ask myself is, am I comfortable? And if the answer is yes, then I'm actually doing something incredibly wrong with my life.
Right now, I think most people believe that it's impossible to grow their wealth by leaps and bounds. And they are wrong, very, very wrong. Most people don't know how to create a legacy that will continue once they've gone and that can even be passed on to their children and their grandchildren. Don't you think it's time that you got serious? If you've been trying to work out how this puzzle fits together, this might be just what you're looking for. Register your expression of interest and go to wealthretreat.com.au to get all of that wrapped up, and we'll take you through to the next step. Lovely chatting, Chris and Michael. We'll catch you again next time round.
Well, I hope you can now see why I really wanted to share this episode again with you. There was so much gold in that particular episode that I hope you got benefit from it. And if you did, there's in most podcasts app a share button down the bottom. Pass it on to somebody, tell somebody about it, because just like I'm trying to help you grow more financially fluent, let somebody else become more successful as well by passing on the message. And similarly, I appreciate it so much when people leave reviews, and I got a 5-star review from Julie S58. It was a little while ago, so when I read out your review, if you would like a copy of any of my books, just email me. I'd love to give you one as a way of saying thank you for the reviews. Now, Julie left a really, really long one, so I'm going to cut it a bit short, but she said, I often listen to your podcast on Saturday mornings and thoroughly enjoy them. I've got 3 investment properties now, and although they're essentially doing well, you touched on the fact that unforeseen difficulties may arise, and indeed they have, but fortunately they're not insurmountable. So I'll inspire to be the elephant as you suggest and carry on. Now, I know which episode she was talking about. If you haven't heard that, go back and have a listen to some of the previous episodes. So many people do just binge on the old ones. That's really great. Anyway, long story short, because it was quite a long review, Julie said, overall, thank you so much for your ongoing inspiring advice. I wish I'd tuned in a lot earlier in my property investment interests. Well, doesn't matter, Julie. Thank you for picking it up now, and I look forward to following a journey with you and hearing how you go. So once again, thanks for listening to this show. As you now know, we produce 2 episodes of the Michael Yardney podcast every week, so I look forward to catching up with you again real soon. In the meantime, spend your time wisely.
Thanks for listening to this episode of the Michael Yardney podcast, which was brought to you by Metropole, who help their clients grow, protect, and pass on their wealth through strategic property and wealth advice. If you like what you heard and don't already subscribe, you'll find us on iTunes or on your favourite Android app as the Michael Yardney podcast. Watch out for our next show, which comes to you twice a week, and you'll learn some new ideas about property investment, success, and money in around 30 minutes. To get more of Michael's thoughts, go across to www.propertyupdate.com.au and sign up for his daily morning briefing, and you'll hear from not only Michael but a group of leading property success and money experts. And just a reminder that the information you heard in this show today is general educational advice and not specific investment advice, as we don't know your personal circumstances. If you're looking for specific advice, why not ask the team at Metropole to help you?